Well, first of all, when people think about real estate investing, they think that they have to flip or they have to own single family home by themselves. That's the initial thought or initial common thought people have. And that can be true, or you can also invest it passively. Because one of the reasons when I ask my friends, why do you not invest in real estate? They say they don't have time. They don't know how to do it, right? But now we're going to go back to the word leverage. You can actually leverage other people's expertise and co-invest with them. So they have to think about, and these days with the AI coming in, if they want a peace of mind, if one day their boss, they got laid off, as we all see news about tech layoff these days, what kind of income sources do you have? How much cash flow are you going to have coming in for the next 6 to 8 months?
Quick favor before we jump in. It always surprised me that a large percentage of people who listen to this show regularly haven't yet subscribed. If you're a commercial real estate operator, investor, or builder who values conversations like this around deals, capital, and technology, please take 2 seconds and hit subscribe. It's a simple, free way to support the show. My commitment to you is that my team and I will continue bringing you higher level operators, stronger conversations, and real execution level insights every single week. Thank you. I truly appreciate it. Welcome back to the AI Edge podcast. I'm Louis Fernandes. This show is for operators, founders, investors, and decision makers, the people building real businesses, navigating real markets, and figuring out how to grow with discipline in a changing world. Today, I'm joined by Chutima Barrios. She is the founder of RentRoll Capital. Chutima brings a real sharp combination of industrial finance experience, multifamily investing, and a strong focus on helping busy professionals in high-income parent build passive cash flow through conservative real estate investing. What stands out about her approach is that it is a no hype driven. It's a grounded and disciplined underwriting, downside protection, stable cash flow, and clear focus on leverage, not just leverage through debt, but leverage through asset teams and systems. We're going to talk about how she thinks about conservative multifamily investing in today's environment, where sponsors often overreach, and how she evaluates deals and where technology and AI may start playing a bigger role in disciplined decision making. Chutima, welcome to the show.
All right. Thank you. Thank you for having me.
Fantastic. When someone asks you, Chutima, what do you do today? What's the simplest way that you explain it?
I partner with busy professional working parents to invest in multifamily so that they get passive cash flow to support the family.
Beautiful. Your background includes private equity, board
Yes.
reporting, financial planning, and corporate development. How did that path eventually lead you into multifamily investing?
Yeah. So I have over 15 years of finance investing, but I got serious with real estate investing almost 10 years ago. And that was when I became a mom. And my first child, my daughter, we found out she had food allergy, the severe one. And so we decided to take her to do treatments. And I'm grateful that these days medications are so advanced, it can help her outgrow the allergy. However, the process is long and expensive. So just one type is almost $10,000, take about 18 months, and the insurance doesn't cover it. So I started thinking, as I was working full-time, two job, I took time off, take my daughter to see specialists for appointments. I was like, wow. I started to had that insecure feeling, right? I wasn't showing up at work full time and all that. And I was like, okay, we need to have alternatives. We need more cash flow. I need that flexibility to be there for my family. Oh, and thankfully, my husband encouraged me to look into real estate investing. And once I started, I didn't stop. So over 6 years, we gradually built our personal portfolio to have strong cash flow that allow me to leave W-2 and focus on real estate investing full time.
You described your journey in one word, leverage. What does that word mean to you personally?
Yeah, leverage means I think about it's hard to do everything by yourself. It's not just like borrowing money. in financial term leverage, but you can also use other people's skills and knowledge to help you to where you want to be. And in fact, we all are leveraging each other somehow. Even if you're a W-2 job, you leverage your employers, right? You have that workplace, you get payments and all that. And if you think about investing, you also leverage some experts in some way. When you do 401k investments, you put into a fund. So there's a fund manager working for you, right? And for real estate, similarly, you can leverage other people like the experts, operators, business partners to invest with you.
Was there a particular moment where you realized you wanted to stop trading time for income and start designing something more scalable?
Yeah. So I was doing all these before I started doing RentRoll Capital. I was taking care of our personal portfolio. So we had 7 properties of small multi-units. I did bookkeeping, prepare financial summary to the CPA for tax returns, and working full time. Try to take care of family, be present for my kids. And I'm like, wow, this is taking a lot of time on me. And especially, I think the really pivotal moment was when my mom, who lived in Thailand, had a heart attack, and I had to fly to Thailand in the next 40 hours. So I was like, oh, wow. I wouldn't be able to just do everything like that now. I do need more passive income so that I can just be anywhere, anytime, and still have more cash flow. So I was like, okay, real estate, what we have is great, but how can we have more consistently? Yeah. So that's really the pivotal moment.
That's beautiful. You speak a lot about freedom, presence, and building around family. How much did becoming a parent shift the way you think about money, work, and investing?
Entirely. And even today, becoming a mom, like changed my mindset entirely. Like you have that little life depending on you, and you start thinking about like what you do today and the impact to them, right? I was like, okay, if I didn't have kids, I probably make different decisions. I probably stay in W-2 because it's just like, okay, I keep working, wake up, go to work, go home, watch Netflix. Why not? Right? But now I have people that I really want to take care of. And when you think about taking care of other people, you want to do greater things, bigger things, making more impact.
That's beautiful. Let's talk a little bit why multifamily and why this model. So, my first question is why multifamily specifically?
Yeah, why multifamily? I think, first of all, it's a basic need. People need a place to live, right? And from our personal experience, how we started in rental properties, we bought outdated building, renovated them, make it a nice place, and tenants move in. And we provide, all the maintenance on time of our tenants. I wouldn't say all. That's would be exaggerated. Most of our tenants gave us good feedback. They appreciate our landlord, how we take care of them as tenants and how they have nice place to live, and they can call it home. So I feel like this is the asset class that we can make impact for our tenants too. And of course, like financial numbers is predictable. We know how to manage it. And yes, I invest in asset class that I know how to take care, how to manage both upsides and downsides.
What made multifamily feel like the right vehicle for stability, leverage, and long term value?
Yeah, so it has a lot to do with not just let's buy it at any time. And I mean, we have heard of properties going down. We have heard of deals going south this day. So that's why I focus a lot about being conservative or be realistic as well. But multifamily, if you really understand the fundamental of it, which is about supply and demand, and you make decision based on that, then you can have more predictable cash flow and do the leverage the right way. Don't over leverage so that you can maintain that consistent cash flow to yourself and to your investors.
Beautiful, Jima. So, you also talk a lot about helping high income parents and professionals build passive cash flow. What do you think most of them misunderstand about how to actually make that shift?
Well, first of all, when people think about real estate investing, they think that they have to flip or they have to own single family home by themselves. That's the initial thought or initial common thought people have. And that can be true, or you can also invest it passively. Because one of the reasons when I ask my friends, why do you not invest in real estate? They say they don't have time. They don't know how to do it, right? But now we're going to go back to the word leverage. You can actually leverage other people's expertise and co-invest with them. So they have to think about, and these days with the AI coming in, if they want a peace of mind, if one day their boss, they got laid off, as we all see news about tech layoff these days, what kind of income sources do you have? How much cash flow are you going to have coming in for the next 6 to 8 months, right? So preparing today, peace of mind, if you want to really prepare for this ever-changing AI and fast-changing economic environment.
Beautiful. A lot of professionals say that they want passive income. They stay stuck in the same pattern. Why do you think that happens?
I think many people, including myself actually, we were taught or raised with our hardworking parents. And there was a go work in big company, secure that job for stability, security. So we have that in our mind, back in the mind, right? Justly. And that probably stays stuck in many people unless you make a shift, paradigm shift on how you look at W2 job, investing, cash flow, especially these days, it's really hard to retire with W2. You have to think long term. And if you do all calculations, seriously do calculations, how much do you need when you are 65, when you want to retire? And how do you get there? Just keep working will get you there, or you have to do something different.
When you look at your ideal investor, what are they usually trying to solve beyond just returns?
They want downside protection. They want to know how are they going to get their money back, right? So not just talking about like how much profits they can get, but first of all, let me make sure I can get my initial capital back. Yeah, that's the first thing my investors want to understand.
Beautiful. Let's talk a little bit about conservative underwriting and discipline. You position yourself very clearly around conservative underwriting. In your mind, what does conservative really mean today?
Number one, understand how you can actually receive rent from your tenants. And that means if your business plan have to increase occupancy, do you just go in and try to recruit tenants from your neighbor buildings with the rent rate that is higher above market rate? Or you have to lower the rent in order to gain that traction and have tenants move into your building. Number two, if you want to increase rent, is that affordable these days? Real estate and affordability has been, or let me put it this way, affordability has been the issue on real estate, not just renting, but also purchasing the first home, that personal home, right? Some people underwrote business plan for Class C that they're gonna convert that Class C building into Class B, increasing rent to Class B tenants. But in that neighborhood, you still just attract working class who cannot afford Class B rent, right? So you have to understand, again, demand. And of course, when you understand that, you want to also leverage it at the conservative level. Over leverage kills so many deals or the performance. Try to stay within 60-65% LTV. And I know sometimes if the economy is on the rise, you can be a little more aggressive. But until then, we're still on the sideline. If we're not into a recession, we're really on the sideline.
How do you think about capital preservation versus growth in this cycle?
Yeah, this cycle, I think is still the runway on the recovery is still long. It's not going to pick up next year, even though we have heard or the data show that new supply is coming in much lower than the past 2 years. And it depends on the market too. So some market, we can see the recovery pick up already. For example, Houston, we see that demand is now higher than supply, right? In another market like Austin, we still see supply higher than demand. So you really have to understand that path and still keep being conservative, especially we have these uncontrollable factors like the war that's going on right now. Oil price these days can cause hyperinflation with construction materials, cost of living that people might not be able to pay rent as they used to. Yeah.
Where do you see most sponsors overreaching right now?
I think some people started to assume compressed cap rate at exit. So they think this is the bottom, and now they're using compressed cap rate, which I think we just cannot control that, like the cap rate and timing, right? You say in the next 5 years, cap rate gonna go down. We just don't know. So I would rather be conservative on that exit cap rate.
Beautiful. When a deal looks attractive on paper, Chichima, what are the first things that you instinctively want to pressure test?
Well, before doing the pressure test, I look at the operator first, the sponsors team. So before looking at numbers, like who's going to run the deals, who's going to manage my money, right? And understand the capability, the track record, how they take care. If they've faced any challenges in the past, how did they take care of their investors? People can make mistakes, but when that happen, what do, right? And then going to market, I was like, okay, what's the dynamic in the market, right? And then look at the business plan, look at the numbers. What I would stress test is the break-even occupancy. I would love to understand on day one, without pro forma, without adjusting any number, what is the lowest occupancy this asset can be in order to still have break-even cash flow.
That's a great metric right there. You posted recently about a deal that looked strong on the T12, but rent roll, delinquency, and revenue composition told a very different story. How do you train yourself to look past the marketing version of a deal?
Well, a lot of practice for sure. After analyzing so many deals, you started to see the pattern of what data you should look at. And also, actually, you know what, like by talking to other operators as well, learn from other people. That's why leverage is important, right? You can learn from other people about their mistakes. Like, what do they see? Like, why that deals didn't perform, and they would share one of the main reasons is about revenue. Because expenses are relatively fixed, save for like insurance expenses that can be crazy sometimes. But other than that, the revenue is really the major driver of your cash flow. And if you overestimate your revenue, then you might overpay for your asset. And then, so after understand like the breakdown, how to do diligence, I set up that checklist of like, okay, verify the rent roll, reconciling what was reported on paper and the bank statements. So bank statement will tell you everything because you can see actual cash coming in, right? Not just believing on what broker or the marketing material tell you.
Chichima, what do you think separates disciplined operators from people who are just good at building decks?
I think people can have FOMO, fear of missing out, and that's normal if we are human, and that's why the discipline come in. I think I actually started looking into commercial real estate investing in 2022 because, of course, I have seen like, oh wow, people kept announcing the closing deals. They're now from operating as short-term rental to now owning 1,000 units. So I'm curious, how did that happen? So, but of course, I'm like, but these kind of debts, interest rate wasn't making sense. So I was just, yes, I did have a FOMO, but at the same time, the numbers tell me that things didn't make sense. So I was like, okay, I'd rather be safe than sorry. And that's what discipline mean. Like, you shouldn't take, or, well, I wouldn't say you shouldn't take bridge loan, but if you do take bridge loan, you should anticipate the consequences in a realistic way, right? And that would be the discipline too. If you continue saying the rate gonna be 2-3% forever, then that's really unrealistic.
I agree. Let's talk a little bit about operator thinking and where the market is right now. You said your model is simple: buy right, finance right, operate right. Let's break that down. When you say buy right, what does that mean in practical terms today?
Yeah, for today, again, it depends on the market, but in the market that I like, there are markets that have continuous population growth, income growth, because that's tell us about demand, right? And if that market still have influx of new supply, then we have to understand that impact too. That's why buying right means you really understand the dynamics of the market and you do the projection to reflect the fact. Don't be aggressive with rent growth if your market still have new supplies coming in, and stick with that number. Even though the numbers came in 30% below asking price, you have to submit that number. Don't stretch it. Don't try to win the bid because you want the deal. If the deal say, no, you have to do $10 million, then submit 10 million, don't do 11. That's the buy right.
That's beautiful. What markets are you currently invested in or that you like?
Yeah, so we have properties in Houston, Austin, Greenville, South Carolina. Those are multifamily properties that we have. We have one assisted living in California as well.
Beautiful. When you say finance right, what debt mistakes are you seeing others make?
Yeah, so again, like financing right. So I see operators who start using bridge loan now, which is okay. But again, what do you assume when you refinance that bridge loan, right? And I already see again, operators assuming that the rates will go down in the next 3 years. And we are not the government. We cannot control that part, right? So I will stress test, what if the rate go up, not going down? Can you refinance it? What will happen?
That's great advice. When you say operate right, where do strong operators create the most value after acquisitions?
Yeah, working with the property manager, make sure property manager are actively taking care of the properties, because sometimes tenants just want to leave the property because there's no maintenance service coming in time, right? So that's number one. We want to retain current tenants before thinking about adding new. And if you have to add new, how do the property managers doing the listing? The accuracy of it, how do they advertise it, how do they track the show rates from appointments and all that. So set up KPIs with the property managers so that we can also track their work, because what we don't track, we don't get measured.
I love that quote. A lot of investors are waiting on the sidelines for rate cuts, right, Chutima? How are you thinking about the current environment right now?
Yeah, actually, like there are investors who waiting on the sideline, not just rate cut, but they were concerning about the economic conditions, right? Which makes sense too. I understand there's still uncertainty these days. But if someone, on the other hand, just waiting because they say the price is too high and want the price to come down without more supporting reason or data, I feel like that day will never come to you. You don't even set up the price, like what do you mean for the price to come down? Yeah. And sometimes actually the funny part is some deals that come to my deck was presented as, hi, the price is going like below, like 30% below 2022 price. Is that a good one? We don't know. It did come down, but what does that mean? Yeah, so just stating that you want the price to come down, you need to really have the clarity, what it means to you, and how much that price have to be.
Do you think the market is punishing aggressive assumptions more than people realize?
Well, the market didn't punish them, but they just they just started off wrong, right? If they're too aggressive because they're not realistic. Yeah, I think that's it. I'm gonna keep it short for that question.
Where do you see real opportunity hiding right now for disciplined multifamily investors?
Actually, there are a lot of deals
There
um
are.
in market, and actually maybe not maybe in market. There are deals that many operators, owners are holding on to and trying to find a way how to sell them without having to cut loss, at least get some money back to their investors. Or even the lenders also try to work with the operators as well. How can we, with the lender, not having to cut that loss? Because there are deals that some people share with me. The current value is like 50 million under current mortgage balance. So they were working out on that deal. So I'm like, okay, I still have to figure out how I can help them.
Tell us a little bit about that deal. How many units? And
It's a portfolio of many properties, but then without going into confidentiality information, yes, it was overpaid, as you can imagine, and commercial loan due in 5 years, which coming to due next year. So they have to sell. The lender also they already extended the loan maturity as well with the lender. So now in order to buy that, that's a way like we talk with equity holder on how to buy it out from other investors, right? But then after that, next year we still have to refinance it. And how to refinance it in a way that we can still pay back the loan. Because it's like 50 million below. Yeah.
amazing. I'm interested in seeing how that actually turns out.
I'm like, well, somebody gonna cut loss.
You said something really sharp in your booking note. I moved from trading time to designing leverage through assets and teams. Let's go deeper on that. What does leverage through teams mean to you?
Yeah. So as I'm working on multifamily, I do need a team. Like my lender is a team, right? The lawyer who helped take care of compliance is also my team. Operator that I partner with, right? And even investors, I look at them as my team because they provide resources to us, the capital. So, and I couldn't do it by myself. So really like commercial real estate investing is a sports team. And you need everyone to work with you on the same timeline, the same pace, so that we all achieve the goal together. And also the property manager is also very important because closing the deal is just the beginning. Right? Operating it, making it to meet the business plan is also important.
What does leverage through systems mean to you?
Yes. So I work a lot on Excel with my work experience, and it can be exhausted if you have to work with a large numbers of units, like the large properties. How are you going to review the rent roll if there are 4,000 rolls? Because sometimes the rent roll report come in, one unit have 7 lines of income, right? The base rent, RUBS, utility reimbursement, pet fees, late fees, and so on. So how are you going to quickly grasp that information of, let's say, 400 units, right? Just spreadsheet. You're going to go through every cell? No, that's going to take you forever. That's why the system like AI can help if they can parse the Excel information into organized categories and summary of what's going on. And if they can flag of like, okay, the trend, if they can create AI, that means AI, create trend line of the rental or some kind of rent summary for us to truly understand average rent per unit, the high, the low, the medium. Then we can take that information to do deeper analysis more quickly.
Amazing. At what point does multifamily business stop becoming about just buying deals and start becoming an operational machine?
Yeah, I think it's always about operation. Like multifamily investing is the operating business, but it's just that we used to get used to manually do things, right? So let's say even my husband, he used to like carrying the keychains of our rental properties, and I'm like, stop doing that. We have like keypad, digital lock we can use, and you can use system to memorize like record the codes and everything. And we don't have to walk in with these big keychains, right? We just have to really look around what kind of technology and system we can use to help us operate more efficiently.
Part of the business still requires the most human judgment.
I would say tenant screening.
Yeah.
That's one thing that my husband liked to do when for our personal portfolio. He was like, and especially for the Class C asset, he wants to have that feeling, the gut feeling when you talk to people, and you can feel if there will be good tenants for you, right? Because they can show good data, or some people even fake paper and submit it to the system. And if the system doesn't catch that, it will say, oh, this is a good tenant, right? And sometimes you have to really look through that pay stub that they send to you. Like there are people who fake pay stub now these days, unfortunately. Um, Yeah. So I think like things about human, we do need human judgment.
Part of the business do you think should become more systematic over time?
Systematic. One of the low hanging fruits is things about admin and paperwork. So like the rent roll, I mean, tracking rent and all that, you should consistently use system, don't manually enter things and or do the reports. If you can have system to help you run reports, right? That will help a lot.
Amazing. This is the AI Edge podcast. Let's talk a little bit about AI and some technology. All right. Let's talk about technology. Where do you think AI or better systems could make the biggest impact in multifamily today?
So a lot of people started talking about using AI for underwriting, and there is already AI underwriting out there already, which I tested and I feel like, yeah, it's good too. Just have to feel more comfortable using it consistently and at the same time. And if the model is not that complex, I feel like I can trust AI more. But sometimes I have scenarios where things getting more complex and I feel like, okay, I have to double check on my own spreadsheet. But I can use AI to at least organize my rent roll, right? And then do the simple projection. And on the complex part, I can double check it. And that means like waterfall if we have to do some specific split and all that. Yeah. But AI will help a lot with underwriting.
Underwriting. Excellent. Do you see the bigger opportunity in deal screening? Are you able to find deals?
Well, deal screening, I actually haven't found AI that help me do deal screening, but there are AI that say you can do 2 minutes analysis, right? Which I can also like do it quickly too. So I haven't found it to be like the life changing for me. I would love to find something. Yeah.
Yeah. How about investor communication?
It sure help with like writing email better, scheduling email out for investors, or even do reports if we upload our financial statements to AI and just keep it clean, make it nice for investor to read. Yeah, that helps.
How about asset management?
Asset management, I think not really AI, but using software. I don't know, like this. There's a thin line. Are you using AI or not? But it's a software and help us track the communication with the property manager, right? And then tracking the to-do list, check it off, follow up. Yeah, that would help.
Amazing. What part of your workflow still feels too manual today, Chichima?
Right now, I haven't used AI a lot on like scheduling email. I still do that manually a lot. Because
Okay.
partly is also about things that I would like to put into the email. So I sometimes I ask AI to like give me an idea what to do, or even social media, right? Like what kind of content should I do? It just came out very fluff and that that's not really insightful, put it that way. So I have to still think about that part of how to train my AI, I guess, to be more insightful if I want to use it 100%.
I know you like spreadsheets. Where are spreadsheets, inboxes, and repeated follow ups still slowing operations down?
Actually, follow-ups is
Yeah.
still manual too. Yeah, now that you mention it, yes. Yeah, because I go to conference, right? And after that, you should follow up with people who you met. And that's really the manual part that, okay, I have to go through the business card, write an email, set up meetings. Yeah, so that's still the manual ones.
Do you think AI can help investors and operators make better decisions? Or do you think the real opportunity is more around efficiency and communication?
To make better decision,
Yeah. Yep.
I think the transparency is more important. AI can help you in terms of like, yes, they don't have feeling, right? So their recommendation might be less objective because sometimes people fall in love with the building, not the numbers, or they just want to have more deals under management, right? So AI might be able to help with that. But then you have to be transparent to yourself first when you do the deals. Are you stretching the numbers? Are you just manipulating it so that you just have more deal and get fees? Yeah. So transparency, integrity is really important.
Where do you think technology gets overhyped in real estate?
Actually, I don't have answer to that because I feel like we're still early
Yeah.
on the AI.
Yeah.
I think things gonna keep evolving. Yeah.
Absolutely, I agree. If your deal flow doubled tomorrow, what breaks first operationally?
I think communication with the investors, have like so much deal flow
Yeah,
and I have to keep updating my investors. So I think today I operated to what I have, right? But actually didn't think about like if I scale my leads to X, right? And how would I do it more efficiently, authentically too? Yeah.
yeah, 10x would be amazing. If there was one process you could tighten up immediately without adding headcount, what would create the biggest payoff?
That's interesting question. I think the scalability of the investments, because we invest, we follow the same process, right? Of course, adding more doors technically will give you more cash flow, but of course there are some factors that we have to consider. But let's say everything else the same. If you can find a bigger deal size, you will have more return in dollars term, not percent. And you don't have to add the head count. Yeah.
Amazing. Where do you still feel too dependent on people manually moving information from one place to another?
Got to think about that one. People moving. I think when we create data room, I guess that's actually is still my manual process of like, okay, creating deck, put it into the drive, sending it out to investors. I actually had not tried AI to create deck because I feel like there's some nuances that I need to take care of. Maybe AI can help me get a starting point, how to design and set the structure of the deck. But that's still the part that I have to put information, correct it, organize it. Yeah. So that's still manual. Yeah.
Amazing. All right, let's talk a little bit about the human angle and investor trust. A lot of your content speaks directly to working parents, high earners, and people who want freedom, not just returns. Why do you think that message resonates so strongly right now?
Yeah. If you would just want money, there's so many ways you can do. You can try crypto. You can do gold.
Right?
Right? You can try so many other avenues if you just want money. But then all those avenues, are they predictable? And if they're not, right, then what do you have left? So if you really want to have freedom, and the true freedom is you know what's coming in each month and you can be hands off and you can do things that you like. I think that matters these days.
That's beautiful. How much of your business is really about investments and how much is more about helping people redesign their lives?
I think my investments help my investors think about what they can do
Yeah,
more, right? Or having not to do more too. So one of my investors I talked to, she works in tech and she just had newborns and she was like, I don't think I can keep working these long hours anymore. I want to have time with my baby. I want to be with my baby. So yes, that's why you need like second source of cash flow or a backup cash flow in case you feel like you really want to leave the job. You have that source of income coming in to help you.
amazing. What do you think high income professionals need more of today? Better deals or better financial clarity?
Financial clarity is number one. Yeah, there's so many deals, but if you don't have clarity, you can't make decisions.
Beautiful. Chutima, let's have a little bit of fun and do a lightning round. All right. Some quick answers. You ready?
Okay.
One word that describes your investing philosophy.
Predictable.
Most overrated metric in multifamily.
IRR.
Why is that?
Because IRR, like you can manipulate the IRR with the exit cap.
Agreed. Most underrated metric in multifamily.
You on cost. Not many people talk about it.
No? Why is that? Why is yield on cost underrated?
Because it tells you the buffer you have, what you're going in, and the total cost that you
Beautiful. Biggest mistake passive investors make.
biggest mistake passive investor make. I think they just look at the deck, listen to the sponsor talking, and they write a check without asking questions.
That's a big mistake. Chutima, speed or discipline?
Actually, both.
I agree. Equal. What does success mean to you now?
It means I can have that freedom. I really value freedom a lot. So when I have the freedom to do things that I like and still have, income coming in without having to worry about it, that's a success.
That's beautiful. Chutima, for anyone listening who wants to connect with you or follow your work or learn more about RentRoll Capital, Where's the best place to find you?
Yeah, so I am currently most active on LinkedIn. I post articles, share insight behind the scenes, personal story on LinkedIn. You can connect with me using my name, Chutima Barrios. Yeah, and then we go from there. Just make sure to DM me so that we can have one-on-one call too.
That's beautiful. Chutima, this was a great conversation. I really appreciate the way that you think about leverage, discipline, and designing investments around real life, not just around returns on a spreadsheet. For everyone listening, if you got value from this episode, share it with another operator, investor, or professional who's trying to think more clearly about multifamily, capital preservation, and building long-term freedom the right way. Chutima, thank you again for being on the show.
Yeah, thank you for having me too.